Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 314 for October 4th, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today we will be talking about the S&P 500 and everything else that's going on in the markets this week. So you should be seeing the option professor screen right now. And also I have arranged for Sonny Harris, Wally Olopade, Erik Gebhard, and to join us as well, and the option professor to moderate. Wally, did I say your name right this time?
Yeah, you did. You did. Good job.
All right. Just have to make sure.
All right. So we're ready to roll, right?
And the option professor is here to moderate, so I'm going to go ahead and turn it over to him. Yeah.
Absolutely. Perfect. Guys, we're going to get into a lot of stuff here today because in the last week, we've just seen a lot of different activity in the stock market that obviously needs to be addressed. But before we get started, so everybody knows who's talking and things like that, Sonny, let's start out with you. A little background that can be somewhat brief, although you had such an extended career. A little bit about yourself and a little bit about the company.
Well, I'm a mathematician. I've been trading for 40 years. I have a website called moneymentor.com, and I put everything that I know there. So anything you want to read about me is on Money Mentor.
Sure. And Sonny, last time we were here about a month ago, I was talking about how I was very, very bullish on the XLE. You put it into your system and you said, this thing looks like it's going to 55 and 57. This was when it was in the 40s. So obviously a good indication that your stuff can work pretty sharply, because that's one of the best sectors to be in the last week is the energy sector. So that's people should realize that, if you have things that you're looking at, like I did, then talking to Sonny about running it through her Sonny, what do they call it? Sonny Bands, right?
Correct.
Yeah. So you run them through the Sonny Bands, and then at least you have another resource of information to kind of verify or deny what you're thinking. In this particular case, it verified my thought, and obviously that's why I'm still in there today, among other reasons. So that's good. I just wanted people to know that you can take your stuff and their stuff can be put into the same blender. You know what I mean?
Yeah.
All right, let's move over to Wally. And Wally, a little background on yourself and a little bit about what's going on down at your company.
Yeah, sure. So my background is in accounting and finance. So we created the website called Right Side Trading. The whole concept is trying to anticipate what's going to happen on the right side of the chart as opposed to hindsight. And so, so we use that, and we're waiting for the market to hit a bottom, hopefully soon, and see if we can go long again.
Yeah. And, the news changes all the time. So whatever they're worried about today could be something that maybe they're not so worried about later on. Erik, are you here with us?
Yes, I am, Professor.
Oh, okay. Because I hadn't heard. Yeah, I hadn't heard you yet, so I didn't know if you were with us or not. So, Erik, quick background on yourself and what's going on at your company. I know you do a lot of options, so it's interesting to hear what you got to say.
Yeah, absolutely. Well, it's about 30 years now, and started a brokerage firm in 1997 with my business partner, and we focus on, as of late, I guess you would say, we do all futures, of course, but our main focus would be on collecting premium. We're selling option spreads and collecting premium for the most part on the E-mini family of stock indices. With really the majority of what we do is probably on the ES, or the E-mini S&P 500. So we use some algorithms that we developed over the years based on all of our time in the market. So we have a lot of help from technology to give us signals as to when to enter a trade, at what price, and of course, more importantly, when to get out of the trade, depending on the risk or the reward. So we don't hold things till expiration. When we're collecting premium, we always close our trades out before expiration. So that's why we'd like to use the automation to help us along the way.
Yeah. Yeah. My philosophy was always that once an option gets underneath a half a point, it's pretty much a lot of the juice is out of the whole idea. So now you're risking whatever it is. and your reward is a penny or two, it really makes no sense economically to hang with those. I don't think. That's just my opinion. I know some people will sell something for a penny and just love to get that penny or something, you know.
Well, no, I think you summarized it very well.
One thing I'd like to note, since we're talking about options, I think this is very important for people because believe me, I watched the VIX for decades now, and this VIX is banging against 25. If this thing starts blowing through 25, there could be an air pocket underneath us. Conversely, if the VIX, which is up 15% today, reverses, we could be seeing a low because this 25 number was the high in July. It was the high in August. It got a little bit higher in September during that one big drop, but here in October, it's still under 25. Do you see some importance there, Eric?
Yeah, absolutely. Some of our, basically our outlook on the VIX is something that we're, clearly following day by day, if not hour by hour. And I think we have some signals right above 25.50, 25.59, 25.60, right around there. And actually, we're looking at that as a big line in the sand. So I think it's going to fail there, quite frankly. And
I mean,
in other words,
it looks like it. I mean, if there's anybody out there bidding, and if the news is going to stabilize, this would be the neighborhood for it to happen. If we're going to get more bad news out of economic slowdowns in Britain and economic slowdowns in China, and we start blowing out the lows and stuff, I mean, the long-term chart I have up here gives a little perspective on how high we are. Some people kind of sometimes don't realize in perspective how high it is. Now, obviously, it can go on forever,
right.
but that doesn't generally happen, Anyway, let's talk about the questions that we have here and see what's going on. The first question on a Monday is always, what do you think the market will do between now and Friday? For the opening today was at 43.48 on the SPX. So there's your line in the sand. You got a head start if you're negative. 4348 and Sonny, between now and Friday, upper, above or below 4348.
Below.
Below.
Definitely.
And confidence level?
I'm never more confident 50%, but
Yeah,
it's pretty high, I think.
yeah. Well, you'd
got some
say
retracement.
it might be 51 or 52.
There you go.
There you go. Yeah, the preponderance
There
of the
you go.
evidence, right? All right. So, yep, that's one. And now, what does Wally say?
So I believe that if it would be higher, if and only if we can close above 43.06 between today and tomorrow.
Okay, so you've got a line in the sand above 43.06. You'd say the winds of change are blowing, and you take your negative vibe off, and you'd start being constructive above 43.06.
Absolutely.
Okay, I'm with you, Eric. How do you see it between now and Friday?
Well, I guess I'm already starting kind of behind the starting line because we're lower, but I think we'll be higher. I think we'll be higher by Friday.
I mean, in this market, 70 points is nothing. And then when you look at the long-term perspective of it, look at what 70 points means on those long-term graphs. Not much.
I think that I think the machines are going to like what they see, and the lower it goes, the higher it'll go afterwards. So, what do they call it? Buy the dip.
Yeah. Well, another thing I was going to put up here so everybody could take a look at, because I'm trying to. I was out of town for a week on vacation in the Caribbean, so I'm kind of just getting into the swing, but I was keeping an eye on things. And here's what I was keeping an eye on. This is the 20-year Treasury, which we all know went up to like 150 something last week, which is really what started getting everybody freaked out. But as you notice here on this long-term graph, which most people would never look at, we're coming into an area where the long-term moving average, the 36 SMA, is around 144 on TLT. And if you notice, we came down there and we so far have held it. So if this is going to rally, that means yields are going to decline again. And if yields were to decline again, obviously you could take the monkey off the tech back. And since tech is such a big factor in the indexes, that might be where you get your rally from. So if the VIX fails at 25, like you were talking about, Eric, and the TLT rallies off of 144, those would be two ingredients to maybe get a turnaround by the end of the week, wouldn't you think?
Yeah, absolutely. And in fact, just kind of as a side note, I didn't even notice, but I heard, I don't really use social media a lot, but like, isn't there a large outage in some of those big tech social media companies as
I
we
was
speak?
here. I was hearing on CNBC the guys were saying they can't get onto all these things that I never go
Right.
on anyway, so it really didn't matter to me. But apparently, the rest of the 400 million people in the U.S. were upset about it.
Yeah, yeah. And I think I saw as a addendum to that Amazon was
Yeah.
speaking of big tech and whatnot.
You know,
but,
that one, definitely has been a laggard. And a lot of people were saying that, Apple and Amazon were going to take to get a mean game of catch up. Well, Apple did. It went to 150 and change, right? But the Amazon, when it went down that $150 after earnings or something, that really has not been able to get out of its own way. Again, slowdown talk in Britain, slowdown talk in China, it can bleed into some slowdown talk here. And if that happens, obviously this thing is not set up for slowdown, But anyway, let's talk about what's behind each person's curtain. In other words, what are you looking at that's going to be in the winds of change here, Sonny? Let's start out with you. A fundamental, technical, what's going to be in the soup that makes you see things happening a certain way?
I'm just a simple woman. I just trade the Sunny Bands, and it looks like things are going down to me. You mentioned Amazon; it's going down too. And I'm just all technical. It's just all numbers to me.
Yeah, I know. If you're investing in the dollar figure, you're not investing in the parking lot of the company. You know what I mean?
Yes.
Yeah. People always say, don't you follow the market closely? I go, once I buy into it, I made a commitment. And then as long as the price is okay, I could care if they take a 4-hour lunch. You know what I mean?
Yeah.
But let's talk real quick because we have some time here. Bollinger Bands I've heard of. I'm not that familiar with them. I think there's a moving average involved and other stuff like that. But you have Sunny Bands. Can you explain what they are and how they differ from Bollinger Bands?
Well, they differ a lot from Bollinger Bands. I have a dynamic moving average that calculates its own inputs based on the speed of the market. And that's the center of the Sunny Bands. It's two moving averages. They're not simple. They're not exponential. Bollinger's exponential.
Okay.
I think exponential moving averages just whipsaw way too much for me. And a long time ago, I realized that whipsaw is what kills all the traders. We make money during trends and lose money during whipsaw. So I developed this moving average to eliminate most of the whipsaw. And then what I have, and the bands are formed by 1.2 average true range and 2.0 average true range away from the dynamic moving average. So that causes them to be dynamic as well.
Okay.
And
the ones that I'm looking at, the ones I'm looking at on the screen is SMA. So those would be simple moving averages, correct?
Correct.
Yeah. And those are the ones you like better than the other ones, right?
No, I don't like any of those moving averages.
I got you. You don't like that's because you've developed your own
right
brew, your own brew.
My own brew that calculates. So the simple moving average, the red one you have there is what? 8, 10?
I got a 12, 24, and 36.
Okay, so you're 12. Mine would be calculating that number 12 by itself. It would go from 5 to 12 to 6 to 18. It all depends on the speed of the market.
Right. So the velocity is a factor.
Correct.
I'm with you. So it almost has, I wouldn't put words in your mouth, but is there a little bit of almost like an RSI or a stochastic component to it?
There is an RSI component to it underneath in the function.
I gotcha. Okay,
yep.
Now I'm beginning to understand it a little bit. Basically, it's a proprietary indicator you've created by taking what you believe are some of the best items in the moving average world and some of the best items in the relative strength world, and creating an indicator that you feel very good about.
Yes, that's right.
Yes.
You're very clever.
Well, no, I'm in the business of making very complex things understandable. It's called options. So I've got a very long history. Yeah, I've got a very long history of trying to make the complex understandable. And even to me, I like to be able to walk through the mechanics mentally. The logic behind things. You know what I mean?
Yeah, that's good.
I'm not quite the sharp mathematician as others, but I understand where we're going with the car. You know what I mean? I always
Good.
compare it to, I don't know how the speedometer works, but I know if it's going 90 and a 30, I'm probably going to get in trouble. You know what I mean?
You're going to get in trouble for that.
Yeah. All right, let's turn over to Wally. And Wally, what's behind your curtain as far as things that you're looking at, technical or fundamental?
Sure. So mine would be more so technical as far as where we are related to moving averages, but then also more importantly is seasonality. Okay.
Okay, sure.
Yeah, because I know like the last time we talked about how the market was supposed to bounce up in September and then have a big drop that leads into the October bottom. Most people know about or have heard about the October bottom being the bottom for the rest of the year.
Right.
And so quite frankly, everything that's played out, I kid you not, to the T is literally following seasonality. Okay. Because we knew that the drop was going to begin early September. We knew there was going to be a bounce mid-September. And then we knew that it was going to be a sharp sell-off going into October. And here we are in October, and we're literally seeing the exact same thing right now.
Yeah.
So that is one of the biggest things that we're focusing on. And we know that based on that, we should expect things to be pretty rough between now and say the next week or two. And after that, we'll probably start see things settle down. And then we'll see where to go from that point on. But that's what we look at.
And I think, to be honest with you, before I took my holiday down there, I was looking at the markets and I said, if we can't get above 4510, 4500 and start closing above there, this thing is not going to 4600 or 4700 because that's the way the road, you can't get to there without the road going through there.
Exactly.
So obviously, like I say, that idea that you have of wait till it gets above a number and proves it is not a terrible idea, because the people who listen to me about that 4,500 number, they have a lot less Band-Aids that they're using than those who are gutting it out. You know what I mean?
Absolutely. I totally
And,
agree.
listen, I love to hear 46, 4,700. I love to hear $240 on the S&P earnings next year. I love to hear the P ratios are never going to get under 20 ever again. I love to hear all that talk. It's happy talk. It's great talk, right? But if the numbers aren't giving you that evidence, I don't think you just want to you hook your wagon up to happy talk. You know what I mean?
Exactly.
Yeah. So anyway, Eric, behind the curtain for you, as far as fundamental or technical, anything going on?
Yeah, sure. I think it's pretty clear that if anyone's trading options, they have some idea of, a little bit of the secret sauce behind our algorithm and so forth. I mean, you can't really trade options without paying attention to some of the Greeks. And so that's part of what we use with our inputs in our model.
Mhm.
We don't really get into the at least from a surface view. I mean, from the client facing perspective, we're not going to be talking about Rho and Vega and second order Greeks. So
Right.
that's all kind of behind the scenes and embedded into what we do. And so we're looking obviously at the Greeks, and we're looking at duration, of course, is a big factor of that when you're collecting premium. And really managing risk is a key element to what we're doing. Like you mentioned, you don't want to end up in a position where you're waiting a month to collect another $20 on a trade, even though you generally have that same exposure and same risk. So the juice isn't worth the squeeze, as they say.
Yeah.
And
well, I mean, when you're writing the premiums, it's a fixed gain business. So I always like to explain to people, listen, it could be a deal where they work 8 or 9 times out of 10, and that's what everybody advertises. The problem is when you have to deal with people who have a methodology of dealing with that 10 or 20% when it doesn't work, because if you don't, that doesn't work smaller percentage, obviously can be problematic because of the fixed amount of gains you get. So I always believed, you really have to have, and sometimes it can get away from you. I mean, sometimes it just happens, but it would be nice to have a long dialogue when you're doing writing strategies, mostly on the exit strategy, because
that's right.
Time going by and stay in our parameters, that's not rocket science,
Well, what they say is up the staircase and down the elevator shaft. So you don't want to give up a year of gains and a week, that type of thing. So absolutely.
So, and that's why having this VIX stay contained somewhat between 15 and 25 is a world where you can do the writing strategy. It's when it breaks out of the corral and goes to a 35 to 50 number that obviously you have to be gone. You have to be gone. You know what I mean? I was just wondering out loud also, with the options, you get a Facebook down $20 today. That's over 5% move. People who think Facebook on a long-term basis, and even if they just think it's good because they own an Instagram, which is probably not a terrible thing to think. The put options have got to be getting pretty fat down here. And if I'm looking at a chart going back a year on Facebook, but why don't I put it on the other screen and you can see what I'm looking at here. And let's see, we go to a chart that's not so long term. And well, even on the 20-year chart, it's coming into these moving averages here. Say you were interested in Facebook. You see, it's coming right down to the long-term average on the 5-year. So some people are thinking, I heard people bandy about possibility of breaking to 280. You wonder if you were interested in buying it at 280, if you could collect premium down here, and you're signing up to buy it at 280, but if you don't get any stock, at least you collect some premium, right? Because the puts have got to be, the volatility index on the puts have got to be pretty rich. So
yeah. I mean, this is Eric here, and I think that's an excellent idea. If someone is looking to add to a long position in that stock or any particular stock.
Yeah,
absolutely. You can sell premium and, or even add to a position that way and maybe sell some covered calls to pay for it, like a collar trade. So definitely
there's a lot of things to do
options.
when you get a big volatile move in something with the options. At least price them out and do some homework on it. And especially if you're a long-term holder. Here's another guy here. Now, I don't know, like I say, some of these charts look like you could get into spaghetti falling off a table for all I know. That's not the most handsome looking graph I've ever seen. And the RSI now is under 50. So, there's some vulnerability here, but, like I say, if you're a real believer in the company and you want to own it long term, sometimes using the down moves where the VIX gets very big to collect premium or agree to buy stock at a lower level is not the worst strategy to dust off, because when it's dropping like this, most people are, panicking the other way. You know what I mean? And there's got to be somebody on the other side of the trade. So, they sold 23 million shares of Facebook. And yes, it's down 5%, but somebody also bought 23 million shares of Facebook, right? Because there's got to be an offset. But all right, Sonny, you are looking at certain things in the market specifically. And can you give us a few different ideas of what you're kind of following right now that you find interesting, either on a short-term basis or longer term?
Well, on a short-term basis, I follow the E-mini 1 minute, and on the long term, I follow the E-mini 5 minute.
Mm-hmm.
I like gold.
But you're basically you're in and out every day.
I'm in and out many times every day.
Many times every day.
Many times. Back to that Facebook thing that you just said. My Sunny Bands show it moving down to 311.
Sure.
And then Amazon looks like it's going down to 2933.
Okay. So, 300 puts, which would be corresponding to these high points here, which you might have support at. That's probably not a bad neighborhood to look at. And the other one with Amazon, because like I say, I mean, Facebook has got this Instagram. So even if they have trouble with I didn't hear the whole story, but is there some whistleblower says he's got some documentation that they're doing nefarious things and whatever.
Well,
right?
I like that Instagram thing. My dog has an Instagram page of her own.
There you go. There you go. So we even got the canine world going. That's good. Okay. Now, okay. I'd like to hear your opinion on this because I know you have followed her pretty good a little bit, and that is Kathy Wood. I don't know how I would imagine she's getting discounted a bit. But
not doing so well right now.
Yeah. But I mean, would you think, well, at this point, like, right now on the short-term basis, you probably obviously have been negative on it because it's been going down. But would you probably wait to see how things sort out a little bit?
I would absolutely wait. It looks like she's got to move down on your chart to about 100 still, down to
Yeah.
that previous low.
Yep. Yep.
And she's a very smart woman. I think she knows what she's doing, but she needs a short-term system too.
Yeah. Yeah. And what do you call it?
Oh, hey, that reminds me of something I was going to ask you, Sonny.
Yeah.
I know you really are a big fan of Tesla.
Yep.
I was wondering if you had any thoughts about Palantir, because Palantir is a big holding
It's
for all
been
the ARK
going-
funds.
It's been doing pretty well. I do have Palantir from about, where was it? A long time ago, about 5, I think, and it's now up to 23.
Yeah,
It's
yeah,
having,
somewhere
it's having
around
a rough racket now, but maybe
No,
it'll hold this
it's
22
rough,
area.
yeah.
What's your Sunny Band saying about it? Maybe like 22 or something like that, or?
Sunny Bands is the, hang on, let me change it to a daily chart and let's see what Sunny Bands is. It just hit the lower Sunny Band, and that typically will do one of two things. It'll either carry us way on down to about 20,
Yeah.
20 and a half, or it's going to bounce right off that band and go up. So I watch to see what the next bar is going to do.
Yeah.
I
And
like Palantir though.
they have government contracts. Maybe it's being sold off a little bit because of all the debt ceiling gibberish.
Yeah,
But,
that's one.
yeah, but obviously they're going to pass that, and they're going to keep printing because that's what we do here, right?
Right.
Okay, so Wally, you have a few different things that you're kind of focused on. You want to share a few of them with us?
Yeah, sure, absolutely. So the first is, I mean, something that's very obvious that everybody else is saying is the energy sector, but at the same time, also talking about the travel industry. You and I were
Okay.
talking about this the last time we were
Yeah,
on the call
yeah,
together, and I remember you said you were going on your vacation, Expedia, and all that
yeah.
stuff. Did pretty well
Yeah.
last couple of weeks.
Yep.
And so I think paying attention to those airline stocks are beginning to show some move, even with what's happened, honestly, with the last 2-3 weeks. You could
Yeah.
see that these are just going higher. So anybody who's paying attention to airline stocks, energy stocks, and also financials too as well. I mean, those are 3 sectors that I'm.
Yeah, those are the
looking at.
best right now, in my opinion.
Yeah.
And as I traveled, people are out there traveling.
They
The
were.
the planes were full.
Absolutely, absolutely.
Of
My
course,
wife and I just-
I was going to beautiful places, so why wouldn't they be full, right?
No, yeah, seriously. Last week I had my birthday, so my wife and I we traveled on a romantic getaway. Same
Yeah.
thing, the hotels were packed. I mean,
Yeah.
people were out doing things, and
Yeah.
so yeah, the airport was packed.
Yeah.
So yes, people are traveling, and you can see it. You can see it on the charts. These charts are showing that they're ready to go higher. I mean,
Yeah.
I don't know.
And
what other
I will
evidence
say
you
one
can-
thing, though, the financials have had a very large move. And if that bond market does start dropping in yield, I mean, it's already dropped from the 157 down into the 140s. If they start showing a 135 print, I think stuff like the financials could get whacked pretty hard. But that may be a time where your ARK funds and your Palantirs will get back on the bicycle.
It
So
could
I'd
be.
be watching TLT like a hawk if I was holding on to tech, because if TLT goes down to 140, that's going to be a rough racket for tech.
And I appreciate you sharing that too, because here's the thing that I noticed over the weekend. So as I was running my scans, I noticed that regional banks were like,
Oh, yeah.
really
And
taking
well,
off.
I'll show you one that I'm all over here.
Exactly.
It's been a very good friend to me. It has a great dividend, and it was in the 10, 11, 12 area, and now it's in the 13s. It's a New York Community Bank.
Exactly. So
And,
I'm
yeah.
looking at these and I'm saying, why are they moving? If things are gonna get really bad, it's like there's something lurking underneath. They formed some really good chart patterns that tells us that we should be expecting it to go higher.
Yeah.
And I mean,
boy.
and it's not just one; it's a multiple regional banks that are doing that right now. So I don't know what the story is behind it. I'm not really a news person, more so than I am just technical and
Right.
data. So it'll be interesting to find out what is going on behind the scenes on these, because the setups are there to tell us they're ready to go higher.
Exactly. I just have something here I got to do real quick.
Too many, in my opinion, too many people are saying we're going to have a huge crash. I mean, that's usually proof, you know, when everybody says it, it's kind of proves to be wrong.
Very good point. Very good point. But, you know, again, for at least from the way we look at this, just a couple of things. One is, again, we're looking at price bouncing off, you know, some moving averages on these regional banks. Anybody who follows seasonality, which is something that I believe is very important, just to kind of give us an idea of what to expect, shows that right around this time, I remember last year when, you know, the whole pandemic situation happened, November last year, we were seeing the same setups, and we were telling people load up on bank stocks, load up on bank stocks. Everybody's like, no, 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 no. We had a humongous rally in financials. And
Yeah.
is that because of seasonality, or is it just coincidence? My guess is maybe it's a little bit of both, but the data is also showing right now that the setups are there for it to rally higher. And so,
You know, there's a lot of
now,
pressure on energy because these windmills have gone the way of the buffalo, and the solar is not working, and so they are being forced to buy fossil fuels. And when they buy fossil fuels, and fossil fuels has not done any exploration, you've got a dynamic that could be very exciting. So I'm just going to run through some things that I'm looking at, and then I'll get over to Eric. And Eric, you can share your stuff. But I think this is kind of important because looking at perspectives, this is a 5-year graph. So you can see there's a lot of real estate here if this thing gets cooking. And then if you, that's the XLE. And then rather than buying XOP, I kind of focus on the big ones that are in there, which is Schlumberger. And you know, there's a lot of real estate here, you know, and let's take a look at what that RSI is doing real quick. Let's throw that in there. I think it's pretty exciting because, you know, frankly, I get a feeling that there's going to be a little bit of a panic in the energy markets, both on natural gas and on oil, simply because these windmills don't turn sometimes. You're going into winter. Sometimes they freeze.
Into winter, yep.
And the demand is not being met by the green stuff, which is very expensive.
Yep.
And these people are throwing up their arms. They've had rolling blackouts in China. So, and they're already in a recession as far as their PMI and their service indicators. And so, you know, the RSI here is coming right through 50. This baby's going like there. This thing takes out 37, and it's going to look like Bo Jackson. Remember Bo Jackson when he gets out there? He run. Right? So, I mean, I think it looks good. And then the other one is Halliburton. These are the two bigger ones in XOP. And, you know, this thing could be another guy who's got something going on. You know, this totally is 40, 50. So this is a 5-year graph. So, you know, it's not like it's going to go back to the prices of 1981. I mean, this is not that long ago. It was way up here. And then for the natural gas, LNG, Cheniere is not a bad way to play it generally. And you can see, I was looking at this thing in my newsletter. I was looking at it in the 70s and the 60s.
Wow,
Look at it.
Yeah, that's beautiful.
And if you go to a 20-year graph, what does it tell you? Well, we're into all-time highs. Yeah. Supposedly, natural gas is up 6 times in price over in Europe.
Yes.
So,
Wow.
you know, this is the game in town. And because it's not such a big part of the indexes, it doesn't get the print. You know what I mean? It doesn't get
Correct.
the focus.
I agree. I think a lot of people are overlooking this, and whatever the story is behind it, I think some of the things you hit on is very important to pay attention to. But I think there's a lot going on behind the scenes with these energy stocks. Yeah,
like another one. There's Devon, DVN. Marathon is the big one. I'm looking at some of these guys that have a lot of leg room. You know what I mean? Some of the big integrators don't have quite the leg room. You know what I mean?
Yeah.
So that's why the XOP and the
check out
OIH.
MRO as well. Marathon. I think, you know,
I think that's probably
MPC. I usually look at MRO for Marathon. The same thing, man. I mean, these things are like just taking off. I mean, in light of what we've been seeing.
We're going into you love seasonality. We're going to go into where the demand of some of this stuff's going to have to be going on a little bit.
Bingo. There you go.
And like I say, this is another one that fits the bill. And then a lot of people like this one, but it's a very, very volatile. And then it's, you know, it chews up 50 points before you can spell it. And there's the OIH. but people think this thing is going to absolutely zoom. And it's right there at the 50 number. So, you know, I don't know. Can you put the Sunny bands on this one, Sunny? And
Oh,
you were very good with XLE in the 40s.
OIH, you're saying?
Yeah, OIH.
You betcha.
Let's go back to the Sunny well and see what the water tastes like, you know?
And we're hitting overhead resistance on this
Right.
one. But it still says long.
Yeah. And if it got through, any way to extrapolate?
To where it's going, you think?
Yeah, like the last time you said, if this thing gets going on the XLE, you know, going
I
to the
think we're going
55,
to 246.
246.
That's quite a way up, but
Yeah.
yeah.
Well, I
I
tell
don't
you,
know,
you know,
I don't know the time frame of that, but
yeah, yeah. Well, it looks, you know, like I say, it's still a little bit on the ledge here. So, and, you know, the only thing really probably kill energy is if the, what do you call it? If the slowdown of growth became a mantra, and then people would start saying, you know, we're not going to use as
And
much energy.
Sunny Bands went long from, hang on, 189.
Yeah, yeah. Hey, Eric, giving you a little airtime here on what you're looking at and some of the ideas you have looking forward. What's happening with you?
Yeah, you know, sticking on the energy theme real quickly, you mentioned natural gas in Europe. I was just reading about the basically, like you mentioned, it's inflated 6x. And prior to this, of course, and even still, there was a large arbitrage opportunity in those markets, Europe versus US markets. And when one would get too far in one direction or the other, you know, the traders would come in and buy and sell accordingly, and then the spread would tighten again. But of course, that hasn't happened here as of today. And I think you're going to see a lot of funds and so forth. You're going to hear headlines in the near future about not having been able to meet margin calls and being forced, you know, to liquidate, and that even drives the market further against them. So there's going to be some headlines around natural gas, and I don't think it's done. I think it's going to be probably at least double from where it is here by the time we're done with this rally. But anyway, and speaking of commodities in general, the other aspect of our business is basically commodity trading systems. So we use algorithms with some systems across all different market sectors, energy is being one of them. And, you know, people can participate that way as well with just algorithm driven systems. And you can look back at historical performance and so forth. So it's kind of fun to have exposure to various commodity markets with maybe more of a passive approach with some automated systems and so forth. That's kind of one thing we like to do is, you know, I think we mentioned the ARC fund and how, I think it was Sunny that mentioned Kathy Wood maybe could use another component or another element to her strategy. And I think that's kind of one of the things we like to do is look at what other elements can we add and not just be one dimensional. So, but nonetheless, yeah, energies have been inflating like crazy. Commodities in general, CRB index since June of last year, that just exploded, energy being a big component of that. And I think it's just been missed. It's just been, you know, quietly ripping it in the background and missed by most of the media. They're just focused on all the other maybe sexier topics for the day.
Yeah, this is a one that I follow. It's a Vanguard Commodity Strategy Admiral share. And to just give you, it only has been out for a couple of years, really. And as you can see, the market bottomed in March of 2020, which some people are saying that's a huge cyclical bottom for commodities. And this is one that kind of tries to mirror one of the indexes like the Bloomberg index or something like that. And as you can see, it's had a very nice steady up move. And again, they're saying that the soybeans are going to be having a difficult time in China because of the rolling blackouts. There could be a shortage there. You've got the oil, obviously could be a shortage there. And those are two very big components of this thing. Exactly. Now, if you throw in the fact that we may have 5 to 7% inflation, and the Fed can't hike interest rates, TLT never gets under 144 area and starts trading 147, then the only way they're going to be able to do something with this thing is print money.
Can you pull up CRB chart?
Let's see if I have that. commodity, I'm just gonna, I never looked it up, so
Commodity Research Bureau, or could be the CRB.
Commodity Research. Bureau, let's see what we got here. Okay, and see if they give us anything, and they're not really. So I'm just gonna go CRB. But you know, to be honest with you, that one that I showed you, it's kind of
Yeah,
follows
proxy
it.
for it.
Yeah, so it kind of gives you a little bit CRB. I'm not getting home, but it's there. Here's what I did want to ask though. So if they are going to not be able to raise interest rates very much because our national debt is like $30 trillion, and just like Japan and Europe, there's no way they can hike rates with that kind of debt out there, then some people are saying that the alternative would be just to print a lot of money. And if that were the case, is this stuff a bargain here or not? And that's a question I'd like to ask all three of you, because frankly, it's down to crunch time. Your RSI is right there at 46. You don't want to slip in much further. You got some, this is on GDX. These are the gold mining shares. So here's some high points to come in there, and now a low point. You got a rising RSI here. I mean, 36 SMA. So let's go over each one of you guys, how you feel about either this, or I'll show you the silver, which is pretty much the same idea. And are we into like where, if you were seasonality and all that stuff, Wally? I mean, Sonny, how do you feel about these metal things right here? Because they certainly have gotten out of favor again.
Yeah.
They have gotten out of favor, but I still like gold. I still like having the coins. I don't know what it is about that, but every time it gets lower, I buy more.
Yeah.
Just like I do with Tesla. It goes lower, I buy more.
Yeah.
But on the GDX, I've got it, it's down pretty far, and it just turned bullish on the Sunday bands.
Yeah. Yeah. And like I say, you know, if the inflation numbers stick, which it looks like they're going to, because we have bottlenecks, we have shortages, and we've got a situation where demand is strong. So, I mean, that's fundamentals 101, which is not your cup of tea, Sonny, but I like to look at both sides of the fence, you know?
Yeah.
And
I think they have to print more money. They just have to keep printing right now.
Yeah, it's not an alternative. You know, it's not like, you know, there's another way to go.
Somebody suggested the other day that we take some of that printed money and pay off our debt with it.
Yeah, well, they don't want to pay off debt at 1% and 2% interest. You know, that's not what they want to pay off. You know, when you get people to borrow from you at that rate, you want to loan them money all day long.
It's true.
Yeah, I mean, you know, people would, you know, that's why I just think. At least with tax-free bonds, you know, if you get 3% or 2.5%, and then you put the tax thing in there, at least you're getting 4 or 5%, whatever you're getting. That has some reality to it. But this
1%, doesn't it?
Yeah, it does be 1%. You know, that kind of thing. So anyway, how about you, Wally? What are you thinking here on these metals? I know it's darkest before dawn kind of a thing, but
so right now it's one of those turning points, so to speak.
Yeah,
because we are at a point where if it's going to rally, this is where it should. Okay. Seasonality wise, you mentioned that earlier.
Yeah.
It usually doesn't start kicking into mid-November, end of November, beginning of December. So a little bit too early right now. But the cool thing is that we are at a level where if it's going to start reversing, here is where we'll start seeing it base itself out, maybe go flat for like for a couple of weeks or something like that, and then start hitting higher. So right now we're not in gold. We've held off on getting into gold, but we are paying very close attention to it, simply because we know November, December is usually a good time to get it back into gold again. So we'll be paying attention to that. For now, we're not eager to jump in just yet.
Yeah, looking at your
why do you say November, December? I'm curious.
So seasonality wise, sometime around November, you start seeing an uptick in gold. Okay, gold and silver. It usually starts around that time frame, and then it'll go typically into January, maybe February. Now, last year was probably one of the years where it struggled a little bit, but then it picked up. Like I think it was in February, it picked up again in February. But typically for the last 5-6 years, that's when you start seeing gold start making some type of a move.
Thank you.
On the monthly here, I can see where the bands might have gone positive because you got the 12 and the 24 crossing, and you got the RSI crossing 50. So, it is trying to make a turn down here, or at least stabilize.
And that's what I mean too. So that's the good news. The good news is, okay, if it's going to reverse, right here should be where the drop should start slowing down, and we should start seeing. So any change that I see, like you mentioned, if interest rates and all this stuff, TLT start changing, anything that starts sparking gold to turn around, I would say we need to be on the lookout for a potential rally back to the upside again. But it just hasn't happened yet, just not right now.
Well, fortunately or unfortunately, I've had a longer career, and I remember in the 80s when Volcker was in there, one of the problems happened when inflation picked up to 10% and interest rates were at 5%. Gold just went nuts on the upside.
Wow.
So if people start getting into the vibe of we're getting 5 and 6% prints on the inflation numbers, and you start seeing, 1.5, 1.3 on the 10-year, that could set the stage of people, starting to go into the tangible assets in a big way.
Yeah.
And the end of the calendar year and the beginning of the new year seems to be when a lot of people make decisions. And I think that's the seasonality also.
Correct.
Because you come to the end of the year, people say, let me look at my portfolio, I'll adjust it. And it goes into the new year. Let's take a look at the portfolio. Let's change it around a little bit. So if gold were to get some legs in the next 30 to 60 days, I think that would add some juice to it, like you say, going into Thanksgiving and Christmas.
Absolutely. I couldn't say, I
Gentlemen,
could not have said it better.
I'm gonna have to dash off. I have another appointment in just a couple minutes.
Okay, before you dash off, if you have a special offer, or just remind people how they can get a hold of you, Sonny, because again, you can help them with your own ideas, but you can also help them with information on their own ideas too.
Sure, I program and I do consulting, and I have an automated trading strategy now. My 5-minute S&P strategy has been automated, and it's up $91,687 over the last 30 days. So contact me at moneymentor.com. That's the way.
Okay, perfect. Thanks a lot for being here, Sonny.
Thank you so much.
Yeah, always love talking to you. And
And I love talking to you too.
Okay, thanks a lot.
Thank you.
All right.
Thanks, Sonny.
Yep.
Thank you, David.
Wally, let's go over to Erik. Erik, anything else that you wanted to kind of bring out as far as, your, a strategy that you're kind of leaning towards, or something that people could get when they get a hold of you and kind of get more acquainted with what you could do for them?
Right. Well, I think the best thing to do would be simply take a look at our software. We have a couple software solutions that we use, and like we mentioned, one of those would be for collecting option premium. A lot of what that means would be you're non-directional. So I know we've been looking at this through the lens of trying to basically pick a direction on a particular market here, whether it's time to buy now or whether it's time to sell. And that's all good and well, but our main focus with our options trading really is non-directional. So we are looking for markets to stay in a very wide range. We have a kind of a large margin of error, or wiggle room is the highly technical word for that.
Mm-hmm.
So we may have as many as 1,500 points between our short call and short put exposure on the S&P 500. It just depends on volatility at that moment, and of course the duration of the trade. So we're just basically looking for managing trades within a very wide window, a large margin of error. And the other aspect of what we do, of course, is the algo driven systems across energy markets, currency markets, agricultural markets, precious metals, even the stock index futures. So that's an excellent complement, and they're non-correlated for the most part. They're what they call absolute return vehicles, meaning they're not tied to any particular benchmark. So we like having exposure to both of those environments, and people can certainly demo the software, they can reach me, send me an email, Erik, E-R-I-K, at altavest, ALTAVEST.com. And our website, of course, is altavest.com.
Perfect. And again, you have a wide variety of things that people need. You get the stock indexes, which everybody likes to keep a look at. And that would include the S&P, the NASDAQ, as well as the Russell.
That's correct.
Yeah. And a lot of people think if this thing does turn, the Russell is going to be the place to be. And to be honest, it has been holding up pretty well.
Yeah, well, we're looking at the bottom of the Russell range. Let's see if I can pull that up real quick without.
Yeah. And I'll put up
keeping you guys
IWM,
waiting.
which is the proxy I use for the Russell.
The RUT, 2180 is kind of a near-term bottom on that. And, we're close to that today,
Mhm.
but we're kind of bouncing off of that level. In fact, I don't even know what the low today is, but it might even be right on top of that number.
Yeah.
So yeah, that's, I think in our views, more of a buying opportunity, fading the pullback, buying into the trend, buying the dip.
Yeah. I would love to see it trade above 222, 223, and then 225. There's a gap up there, that I'm seeing that it could go up and try to fool around with.
Yep, I see that gap.
Yeah. But like I say, it has a little bit of a one move up there and then a two move that doesn't take out the low of 217 and change. And so now if we take out the 223 and change, you've got a very nice strong formation for maybe a very sustained rally.
Yeah,
that
absolutely. That might form some support, this recent low and then the one last week.
Yeah. No, the markets, I think, are going to be very exciting because, there's a lot of things seems like they're coming to a head. The gold graph looks like it's coming to an head. The interest rate on the 10-year note and the 30-year bond seem like they're coming to a head. And so it is a situation where, I think the way the data comes out this week is going to be very important. Some people are looking at the jobs report Friday is very important because in the last 3 months, we've seen some of the claims going up a bit. So people are a little concerned that the people that aren't going to get vaccinated, they may get fired and that may have an effect on the report. So, there's a lot of stuff coming down the pike, but by the end of the week, if this thing on the Russell is trading 222 and better, and that, it's very possible that we're looking at some of the lows right here. Wally, before we shut her down, did you want to go over a couple of things? And Erik, thank you very much for being here. And everybody should get a hold of Erik and get his information and find out what he brings to the table with both the contracts as well as the options, because there's a lot of good stuff there. Wally, back to you as far as something you'd like to share as far as getting a hold of you and
Sure.
special offer.
Yes. So basically rightsidetrading.com, that's our website. Our platform was created specifically to help us improve our success ratio with seasonality. And so one of the biggest things that I had a challenge with when I first discovered seasonality was whether or not it was going to work this time. And should we be buying now, or is this one of those where it's not going to work? So the results of all that research and how to determine which ones are going to work from the ones that are not going to work is what we then put into the Right Side platform, which can be found on our website, rightsidetrading.com. Once we understand when a seasonal stock is supposed to move seasonally, then it's just a matter of checking the platform each day, each week, each month. And it gives you one trade action. It just lets you know today's the day to buy, or this week is the week to buy. And even after you buy it, if it's something where you start running into problems or things are not going the way it's supposed to, it will let you know you need a place to stop, get out, get insured, whatever you need to do, sell. So it really helped improve our seasonality. And that's why we're able to see things, call things ahead of time, be prepared for it ahead of time, and then know when to take action, when not to take action. And so again, all that can be found on our website, rightsidetrading.com/CFN is what we decided to do for those who might want to take advantage of the discount.
Yeah. And like I say, we had talked about energy last time, and that was a very good idea. I think you were talking about Tesla as it was breaking out above 690.
Exactly.
And that was a very good idea. And then the travel stocks we talked about, that was a very good idea. So There's certainly been some worthwhile information, so I definitely encourage people to get your stuff and take a look at it for sure. As far as Option Professor is concerned, we do have that weekly market update. And again, if you have questions for me of any type, you could always send them over to optionprofessor@gmail.com. And we can do our best to try to help you with the questions you have, either on options or the general market, and get a little bit more insight on what we're saying. But if you go to optionprofessor.com, you can put in your email, and every week we'll send you an update. So that's great. Yep. Well, we got the market right now. Seems like it's still under some pretty decent pressure. We have turnaround Tuesday tomorrow. So we got to remember, see if that works. And we got a big jobs report out on Friday. So lots of stuff coming up. I'm going to turn it back over to David now. Thanks everybody for being here, Wally, and
Thanks
everybody
for having
else.
me.
Thank you for having us, guys.
You bet. And we'll be talking to you again soon and updating things, but everybody should try to take advantage of getting in touch with all the speakers so they can get the details on what they could bring to the table. All right, I'm back to David now. Thanks a lot for being here, guys, and we'll talk to you soon.
All right. Thanks, everyone. Great conversation today. Also, I just want to remind everyone that everyone from all the speakers on today's show will also be presenting on our next Synergy Trader event. That will be Wednesday and Thursday of this week. So October 6th and 7th. Wally is on Wednesday, and the Option Professor and Sonny and Eric are on Thursday. But we have 8 presenters scheduled for each day. And that starts at 10 a.m. Eastern time and will go to 6 p.m. Eastern time. And you can always get access to the live event. Just go to TimingResearch.com/live, or actually during the big events, if you just go to any page on Timing Research, then you'll see a link. So be sure to join us for that. The topic for this one is going to be cannabis and commodities. And so we have a lot of great presentations lined up for Wednesday and Thursday. So also tomorrow, Norman Hallett will be on Analyze Your Trade at 4 p.m. Eastern time. And again, you can get access to that at TimingResearch.com/live. Also, just a reminder, you can subscribe to Timing Research on YouTube or your favorite podcast app. Just search for Timing Research and you should be able to find it. Just want to thank my guests again for today.
Yep. Thank you,
Sonny,
David.
All right,
Thanks,
guys. Thank you.
Thanks for being here. Yes, Sonny Harris of MoneyMentor.com, Wally Olopade of RightSideTrading.com, Erik Gebhard of AltaVest.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you. Right. Bye-bye.